Hello all, welcome back to Metis IAS Academy. Now let us try to understand the next type of bill. That is what we call as the money bill. Now what is this money bill? As simple as the word denotes, anything that is going to be associated with money is what we call as money bill. Now, where is it provided in the Constitution of India? It is provided in Article 110 of the Constitution of India. It is provided where? In the Article 110 of the Constitution of India. Now, money bills are distinct in the Indian Parliament system, dealing exclusively with financial matters. Okay. Now, very important thing with respect to this money bill is, with respect to money bill, it is the Lok Sabha, it is the Lok Sabha who has the ultimate authority. Who has the ultimate authority? Why? Because it is the members of Lok Sabha who are directly elected by the people of India. Now, what is this money bill? What does the constitution say? A bill is deemed to be a money bill if it contains only the provisions related to one or more of the following crucial financial aspects. Okay, that is, if it contains only these aspects, if it contains only these aspects, then it can be called as money bill. Now, let us see what are these aspects. The first aspect is taxation, related to taxation, the imposition, the abolition, the remission, that is cutting down, the alteration or regulation of any tax is what we call as taxation, and it comes under money bill. For example, let us assume tomorrow, or let us take the very recent example, that is with respect to the income tax. Recently, the income tax slab, or the people who are exempted from the income tax, was raised to 12 lakh per annum. Was raised to how much? Was raised to 12 lakh per annum. So this is something that is dealing with taxation. So what kind of a bill is? It is going to be the money bill. It is going to be money bill. Now, next is about custody of funds. What is this custody of funds? The custody of the consolidated fund of India or the contingency fund of India, including payment of money into or withdrawal of money from these funds. That is, see, like every person here has a bank account, and it is from this bank account that we are going to spend money, and it is to this bank account that we are getting credited, or the money is getting credited, right? In the same manner, the Constitution of India also specifies that for the Indian government also there has to be an account. Now, what is this account? This account is what we call as Consolidated Fund of India. It is from this account that the government uses the money, that the parliament uses the money, or it is to this account that the money is going to get credited. And similarly, there is also going to be a contingency fund. That is, every time we cannot rely on the parliament to withdraw some amount of money in case of any emergency. Let us assume there is a very bad disaster, a very bad natural disaster that is happening in the country. In that case, can we wait for the parliament's approval in case if the parliament is not working at that particular point of time? Do we need to wait for the parliament to convene and then release the money? No. For that particular case, we have something called as contingency fund of India. So any money that is being paid or any money that is being withdrawn from these funds also comes under what we call as money bill. Okay. Next there is something called as charged expenditure. Now, what is this charged expenditure? The expenditure, that is, see, for example, there are some money which is fixed every year. For example, the salary of the judges, the salary of the judges. Now, do you think every time the parliament has to vote on this money so that the money is going to get credited to the judge's account for the work that they are doing? No, that is not the case. Okay. Now, these kind of things are what we call as charge expenditure. Now, these things we will be dealing extensively when we deal about the chapter of budget. But for now, just remember that there is a type of expenditure called as charge expenditure. In simple words, these expenditure are fixed. That is, you need not require Parliament's approval all the time to release money for this. So anything related to this charged expenditure is also coming under money bill. Okay. Next, there is something called as government borrowing and guarantees. Now, what is this government borrowing? Government of India also requires loans. Okay. Now, for example, you might have seen Government of India taking loan from World Bank, taking loan from IMF. When they're taking the loan, do you think this World Bank or IMF is going to give money simply because the Government of India is asking? No. So who acts as the guarantee? It is the Consolidated Fund of India who acts as the guarantee for these loans. So anything related to this government borrowing and guarantees also comes under money bill. Next, we have something called as appropriation from Consolidated Fund of India. Now, what is this appropriation of Consolidated Fund of India? It means the money that is used for the government expenditure. For example, tomorrow a new flyover has to be created in your city. For that, the government might require crores of money. So from where the government is going to get this money from? It is from this Consolidated Fund of India. So to take the money out of the CFI also comes under what we call as money bill. Okay. Next also we have something called as public account and incidental matters. So other than Consolidated Fund of India and Contingency Fund of India, there is also called as public account of India. So if there is any money that is being put to this public account of India, then that also comes under money bill. And what do you mean by this term incidental matters? That is any other matter that is related to these aspects. So when we tell money bill, that is Article 110 of the Constitution of India, it is these things that come under the terminology money bill. Okay. Now, why money bill is so important? Why money bill is so important? The reason is, as I told, money bill is different from ordinary bill in a way that this money bill emphasizes the Lok Sabha's financial supremacy. Now, what do you mean when we say that it emphasizes Lok Sabha's financial supremacy? Number one, a money bill can only be introduced in the Lok Sabha. Now, what happened in ordinary bill? Ordinary bill can be introduced either in Lok Sabha or in Rajya Sabha. But what happens in money bill? It can be introduced only in Lok Sabha. Next, for an ordinary bill, do we require the prior approval of the president? No. But for the money bill, it requires the prior permission of the president before introduction. That is, before introducing it in the Lok Sabha, the person who is introducing it has to ask the president whether can it be introduced or not. Okay. Next, another very important thing. Can a private member, can a private member introduce money bill? Now, who is a private member? As we discussed, any member who is not a minister, who is not a minister is what we call as private member. So the question is, can a private member introduce a money bill? The answer is no. A private member cannot introduce a money bill. Okay, a private member cannot introduce a money bill. But can a private member introduce ordinary bill? Yes, they can introduce ordinary bill, but they cannot introduce money bill. So this is the third difference. Okay. Now, the fourth difference. Once the money bill, see, as we know, money bill is introduced only in Lok Sabha. Now, let us assume the money bill is passed with Lok Sabha. The money bill is passed in Lok Sabha. With what majority? Again, it requires only simple majority. Once it passes the money bill, once the Lok Sabha passes the money bill, it goes to Rajya Sabha. Now, Rajya Sabha has a very, very, very limited role with respect to this money bill. Now, what is this limited role? Rajya Sabha cannot reject the money bill or Rajya Sabha cannot amend the money bill. In ordinary bill, we saw that once the Lok Sabha passes the bill, it goes to money bill, it goes to Rajya Sabha. Rajya Sabha had different option. In that option one was accepting the bill. Here also Rajya Sabha can accept the bill. Option two was Rajya Sabha rejecting the bill. But here Rajya Sabha cannot reject the bill. Here Rajya Sabha cannot reject the bill. The third option was there in ordinary bill, Rajya Sabha could, do certain amendments to this money bill. But here, can Rajya Sabha do certain amendments to the money bill? No, Rajya Sabha cannot do certain amendments to the money bill. Rather, what it can do? It can only offer recommendations. That is, Rajya Sabha can tell to Lok Sabha, see Mr. Lok Sabha or see dear Lok Sabha, this is not correct. This clause is not correct. You please consider changing it. So, will the Lok Sabha or is it binding on the Lok Sabha to accept it? No. These recommendations proposed by the Rajya Sabha, Lok Sabha may accept it or may not accept it. Okay. Now let us assume that the Rajya Sabha is being inactive in this money bill. That is in case of ordinary bill. In case of ordinary bill, what we saw was for 6 months the Rajya Sabha has the authority to sit idle on the bill. Okay. After the 6 months, it becomes deadlock. But what happens in money bill? If the Rajya Sabha does not act on the money bill within 14 days, okay, it means the bill is passed by both the houses. But what happens in ordinary bill? If if the Rajya Sabha does not pass this money bill or does not pass this money bill within 6 months, then the bill becomes deadlock. But here it is not the case. Okay. Now another very important thing is once a bill is introduced in the parliament, let us assume once a bill is introduced in the Lok Sabha, and from Lok Sabha when it goes to Rajya Sabha, there is an authority who is going to certify that this is a money bill. Who is that authority? The Speaker of the Lok Sabha can designate a bill as money bill. So the authority to designate a bill as a money bill is the Speaker of India. And the Speaker's decision is final, and courts generally cannot inquire into the proceedings of the Speaker's office in this regard. So these are very, very, very important things with respect to money bill. Now, now, generally, what happens? What happens when the bill is passed by both the houses? Let us speak about ordinary bill as well as money bill. Now, let us assume the money bill is passed by both the houses, by Lok Sabha as well as Rajya Sabha. It goes to whom? It goes to the president. Now, what are the options that the president has with respect to ordinary bill? Okay, with respect to ordinary bill. Now, with respect to the options that the president has, the president can agree on this, can give his signature or assent on this. The president can give her assent on this. Then this bill becomes the act. Okay, that is option number one. Then there is option number two. Then there is option number two. The president can simply sit on this bill. The president can simply sit on this bill. The president is not accepting this. The president is neither giving his assent nor rejecting this bill. The president is simply sitting quiet on this bill. This is what we call as pocket veto. The president is simply keeping it as it is, and this is what we call as pocket veto. That is option number two. Option number three, the president is rejecting the bill. The president is telling, no, I am not going to sign on this bill. The president is telling, no, I am not going to sign on this bill. Then we have option number four. The president sees the bill and the president says certain provisions are not proper, and the president does what? The president sends the bill back to the parliament. Okay, the president sends the bill back to the parliament. So these are the four options that are present in front of the president when the bill is given for the president for his or her approval. Okay, this happens where? In the ordinary bill. Now let us see what happens in case of a money bill. In case of a money bill, as we said, before introducing a money bill, prior permission of the president is required, which means once the money bill is passed, the president cannot return a money bill for reconsideration. The president must either give her assent or withhold it. However, generally, as the bill is introduced with the prior recommendation of the president usually gives assent. Okay, usually gives assent. So this is another thing that we have to deal or we have to see with respect to the money bill. Now, just for your understanding, we shall take a case study of the Aadhaar bill. Okay, the Aadhaar bill of 2017, which created a lot of controversy, which also became a case study to understand the money bill. So, what happened in this Aadhaar bill is, okay, this Aadhaar bill was introduced as a money bill. Now, generally, what is Aadhaar? Aadhaar is basically about biometrics, about biometric identification. But this Aadhaar bill was introduced as a money bill. Now, why was it introduced as a money bill? Maybe government thought that they do not have enough strength in Rajya Sabha. Maybe. But what happened, or this matter went to the court, and what the government said was that, in order to give welfare programs to the people, we generally use Aadhaar as a primary tool. As a primary tool, we generally use Aadhaar to give welfare to the people. And in this case, when we give certain welfare to the people, there has to be withdrawal of money from the Consolidated Fund of India for the subsidies. And it comes under Article 110. And for this case, Aadhaar becomes a money bill. Okay. So the Supreme Court also upheld the government's argument. So this is just for your understanding about how money bill is being used. Okay. So this is about money bill. Now let us slightly discuss the difference between the ordinary bill and the money bill. Now, with respect to ordinary bill, the ordinary bill can be introduced either in Lok Sabha or in Rajya Sabha. But what about money bill? Money bill can be introduced only in the Lok Sabha. That is difference number one. Difference number two, an ordinary bill can be introduced either by a minister or by a private member. But what happens in the money bill? It can be introduced only by the minister. The third one, the ordinary bill, does it require the presidential consent? No. The ordinary bill does not require the presidential consent. But the money bill requires the presidential consent for initiation of this money bill or for the introduction of the money bill. Now, with respect to Rajya Sabha, the ordinary bill can be amended or can be rejected by the Rajya Sabha. But what happens in money bill? The Rajya Sabha cannot amend or cannot reject this money bill. Rather, what the Rajya Sabha can do is the Rajya Sabha can only provide certain recommendations. Now, what is the time period? The Rajya Sabha can sit on the money bill for just 14 days. And after 14 days, automatically it will be decided as passed by both the houses. But what happens in ordinary bill? In ordinary bill, the Rajya Sabha can sit on this bill for 6 months. And after 6 months, if the Rajya Sabha is not doing anything, then it leads to deadlock. It leads to deadlock. Another very important thing is, from Lok Sabha, when the bill goes to Rajya Sabha, it is the speaker, it is the speaker of it is the Speaker of Lok Sabha. It is the Speaker of Lok Sabha who certifies that this bill is a money bill. Who certifies that this bill is money bill. But in case of ordinary bill, the Speaker does not have any such authority to certify a bill as ordinary bill. Does not have any such case as certifying it as ordinary bill. And another very important thing is, in case of a deadlock of an ordinary bill, there is something called as joint sitting. But there is nothing called as joint sitting in case of money bill. Rather what happens is, in case of money bill, in case of money bill, the Lok Sabha has the ultimate authority. It is the Lok Sabha which has the ultimate authority in case of money bill. So these are certain difference between the Lok Sabha and Rajya. Sorry, these are certain difference between the money bill and the ordinary bill. Another very important point that I want to point out is, the ordinary bill can be approved or rejected or even returned for reconsideration by the President of India. But what happens in case of a money bill? In case of the money bill, generally, it can be approved by the president or rejected by the president. But can it be returned by the president? The answer is no. Why? Because this money bill is introduced only with the prior approval of the president of India. So these are certain important difference between money bill and ordinary bill. Now, now apart from money bill, there is also something that is going to deal with the aspects of money bill in our with the aspects of money in our constitution, and this is what we call as financial bill. Okay, this is what we call as financial bill. Now, always remember a very important thing. Financial bill is different and finance bill is different. Financial bill is different and finance bill is different. Okay. Now, what is this finance bill? We will discuss later when we deal with the topic of budget. But for now, we will be dealing with the financial bill that is found in the Indian Constitution in Article 117. Okay. Now, what is this financial bill? It is a broader category that encompasses money bill. It is a broader category that encompasses money bill. That is, if you consider a Venn diagram, okay. So this is a money bill. This is a money bill, and this is a finance bill. That is, all money bills are financial bill, but not all financial bills are going to be money bills. Okay, so these financial bills, they deal with financial matters but also include other legislative provisions. Okay, now what is this financial bill? As specified in article 17, this financial bill, it includes provisions related to financial matters specified in article 110. Okay, alongside other legislative content. Okay, now, for example, for us to understand, let us assume there is something called as cess. There is something called as cess. You might have heard about road cess, right? You might have heard about road cess. Now, if a bill is going to introduce a new cess, okay, and specify how this revenue is to be managed within the Consolidated Fund of India, while also including the provisions on road constructions which are going to be non-financial. That is, see, in simple words, I'll make you understand. Now, there is a bill. It it speaks with the aspect of cess. Now, what is cess? Money. It is speaking about money, fine. But at the same time, it is also speaking about the standards of the road construction. But is the standards of road construction dealing with money? No. Now, these kind of bills are what we call as finance bills. These kind of bills are what we call as finance bills. Now, like the money bills, these financial bills can also be introduced only in the Lok Sabha. Money bills can be introduced only in Lok Sabha. Financial bills also can be introduced only in Lok Sabha. Also, these these financial bills requires the prior consent of the president. Just like the money bill, they also require the prior consent of the president. Another thing, once introduced, these financial bills are passed by a simple majority. Like the money bill, these financial bills are also passed by a simple majority. Now, now coming to the difference. See, when a money bill is passed or introduced in Lok Sabha and sent to Rajya Sabha has very simple powers. But in ordinary bills, Rajya Sabha has great powers. That is, Rajya Sabha can reject, Rajya Sabha can accept, Rajya Sabha can amend, Rajya Sabha can sit idle for 6 months, right? Now, in financial bill, when a financial bill is transmitted to the Rajya Sabha, when a financial bill is transmitted to the Rajya Sabha, it follows a procedure similar to that of the ordinary bill. So this is the difference with respect to money bill and ordinary bill. That is, the Rajya Sabha can either reject or amend a financial bill, unlike a money bill. So can we tell Rajya Sabha has a greater power with respect to financial bill and a very, very, very minimal power or absolutely no power with respect to money bill? Yes, we can tell. Okay. Another very important thing that is we discussed. Generally, the president accepts a money bill or rejects a money bill, but the president does not return a money bill. That is, the president does not use a veto called as suspensive veto in case of money bill. But for the financial bill, all these presidential vetoes, that is absolute presidential veto, that is accepting or rejecting, suspensive, that is returning back, and pocket veto, sitting idle, are applicable to the financial bills, very similar to ordinary bills. Okay, this means that the president can withhold the assent, return the bill for reconsideration, or simply not act on it. And this is in sharp contradiction with respect to what? With respect to money bill. So how can we define money bill with respect to its operation? That is, until the introduction, this financial bill is very, very, very close to money bill. But once it is introduced and once it is passed in Lok Sabha, okay, once it moves to Rajya Sabha, then it acquires the features very similar to that of ordinary bill. So if we want to differentiate between money bill and financial bill, okay, so money bill can be introduced only in Lok Sabha. Financial bill, yes, can be introduced only in Lok Sabha. Money bill requires previous consent of the president for introduction. Financial bill, yes, they also require the previous consent of the president. Money bill are passed by simple majority in Lok Sabha. Financial bill are also need to be passed by a simple majority in Lok Sabha. Once the money bill is sent to Rajya Sabha absolutely have no powers. They can only modify the money bill, or they can only give some recommendations to the money bill. Sorry, not modification. They can give only some recommendations to the money bill. But financial bill, the Rajya Sabha can either accept the financial bill, can reject the financial bill, can sit idle on the financial bill for 6 months, can even amend this financial bill. And with respect to the money bill, the president has only absolute veto on the money bill. But with respect to financial bill, the president has absolute suspensive as well as pocket veto. So this is the difference between financial bill and money bill. Now, now coming to the very, very, very important bill of our constitution, that is what we call as the constitutional amendment bill. The constitutional amendment bill. Now, before we deal with this constitutional amendment bill, what is important for us to know is what exactly is this constitutional amendment? What exactly is this constitutional amendment? In simple words, constitutional amendment is nothing but any changes or modifications or addition or repealing of any of the provision of the constitution is what we call as constitutional amendment. And in order to do it, there also has to be a proposal in the form of a constitutional amendment bill. And this is present where? This is present in Article 368 of the Constitution of India. Now, what exactly the why amendment is important, and then what is the pretext of this amendment, etc. We will be discussing when we deal the chapter of constitutional amendment. But for now, just understand that any bill that is going to modify or add or repeal the provisions of the constitution is what we call as constitutional amendment bill. And where is it found? It is found in article number 368 of the constitution of India. Now, where can this constitutional amendment bill be introduced? It can be introduced in either house of the parliament, that is in Lok Sabha or Rajya Sabha, but not in the state legislatures. Okay, so this is understandable because the amending of the constitution or the amending power of the constitution cannot be given to the state legislatures because it is a very, very, very important thing and it requires the approval of parliament. For that particular case, it can be introduced where? It can be introduced only in Lok Sabha or in Rajya Sabha. Now, who can introduce it? It can be introduced either by a minister or by a private member. Okay. Anybody, that is either the minister or a private member, can introduce the bill. Now, does it require the prior permission of the president? No, it does not require the prior permission of the president for introduction. For introduction. Clear? Now, with what majority this constitutional amendment bill has to be passed? That is, the ordinary bill has to be passed through a simple majority. Financial bill has to be passed through simple majority. Money bill has to be passed through simple majority. But constitutional amendment bill has to be passed through special majority. Now, what is this special majority? In simple words, a majority, that is more than 50% of the total membership of that house. For example, a constitutional amendment bill is introduced in Lok Sabha. Now, what is the strength of Lok Sabha? 543. So, what is more than 50% of Lok Sabha? It is 272. So, minimum 272 members has to sign on this bill, has to give consent for this bill. And not just that, and not just that. There is another condition, that is a majority of the two-third of the members of that house present and voting. That is, for example, let us assume out of 543, 43 members are either resigned or dead or vacant, and another 100 members are absent. So, what is the number that is remaining? It is 400. So, out of 400, two-third members, two-third members of 400 has to be pass give assent for this bill. Now, what is two-third of 400? That is 400 into 2 divided by 3. That is 800 divided by 3. That is 267. 267 members has to agree on this. But there is a catch. What did the first criteria say? The first criteria says more than 50% members has to agree for this. That is 272 members minimum has to agree for it. And as per second criteria, if there are 400 members present and voting, then what is happening? Only the two-third of 400 is 267. So only if 267 members are voting will it be passed? No. Why? Because it is not crossing 272. Now let us assume there are 450 members present and voting. And what is two-third of 450? That is 300 members. 300 members are agreeing or giving assent or voting for this constitutional amendment bill. At that particular moment, this bill is passed. And this is what we call as special majority. And this is what we call as special majority. Now, now, next, let us assume this constitutional amendment bill is passed in Lok Sabha. Is passed in Lok Sabha. Then what happens? It goes to Rajya Sabha. That is, each house, the bill has to be passed separately. And in Rajya Sabha also, it has to be passed with what majority? It has to be passed with special majority. It has to be passed with special majority. Now let us assume in Lok Sabha it is passing with special majority, and in Rajya Sabha also it is passing with special majority. Then what happens? It goes to the president. But now, if the catch is, in case if there is a disagreement, that is the Lok Sabha passes this and Rajya Sabha does not passes this. Now there is no deadlock. There is no provision for holding a joint sitting. That is, even if one house rejects the bill or proposes amendments not agreed by the other house, the bill is going to get failed. So individually, both the houses has to pass this bill separately. That is the importance of constitutional amendment bill. Now, why so much strictness? Because this is something that is going to change the constitution. And changing the constitution, should it be done easily? Absolutely not. It should be done in a very, very difficult manner. It has to be done only when most of the members agree for it. And that is why these provisions are utilized.